there you have it. That's the first take on the market. And in tandem with the SGX Nifty, the Nifty has opened with an 85-point cut.
The Nifty is currently under pressure, down around 0.6%. We had the US markets, which were at 2018 closing lows after the Fed commentary.
We are off of the highs, but given the way that our global peers have performed, I'd say it's not a bad day at all.
It is not a bad day at all. Given the kind of fall that we've seen in the global markets, our market once again has outperformed.
But the action really was in the mid-cap space today. All through the day, the mid-cap index did do a relative outperformance.
Global markets stumble after US Fed's fourth rate hike in 2018, but India bucks the trend to end with minor losses. Mid-cap index ends marginally in the green.
Government moves to infuse 41,000 crore rupees into weaker public sector banks to boost liquidity without any tweaking of the PCA norms. Corporation Bank, Bank of Maharashtra and Bank of India end in the green.
Crude prices stumble further. Brent hovers around this $55 per barrel mark. Oil-sensitive stocks like oil marketing companies, airlines and paint stocks rise in trade.
The rupee breaks below the 70 mark against the dollar after the fall in crude oil prices. On the other hand, tech stocks end in the red.
And NBFCs and small private banks end in the green today. Improved liquidity conditions after the Reserve Bank decided to step up bond buying provides a leg up. Well, those were the top 5 headlines from Dalal Street on a day when, as we just told you, India stood out while global equities saw a red paint. Hello and welcome to Markets Today, Talk Back, the show where we tell you everything that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Ekta Batra. Hi Ekta.
Hi Lata, absolutely. Well, over the next 30 minutes, we will be talking about those top 5 market stories and our guests will be answering all of your stock queries. Joining us this evening to answer all of your queries on the fundamentals is Mayuresh Joshi, and we have technical expert Mitesh Thakkar joining in as well. Gentlemen, before we come to you, let's in fact take a look at how the markets fared in trade today. Lata, it was in fact just that, resilience compared to the globe and a recovery despite the global weakness.
Oh, pretty much. Your headlines summed up the story in the market. This is, I think, maybe the 7th, 8th day that Indian equities are outperforming, and particularly so in the last maybe 3 sessions, Monday, Tuesday, Wednesday. Day after day, we've been outperforming. First, the global story. The slump was not because of anything wrong that the Fed did. The hike was on expected lines. It was a dovish hike, as it was on expected lines. But it appears that the market expected even more dovishness, and especially on the crunching of the balance sheet of the Fed. The Fed chairman appears to have been happy with the way in which the timetable has been laid out, the quantitative easing and its reduction. But the market expected maybe that the tapering will not be as rapid. So that seems to have disappointed the market. India stood out. You could make that out from the good FII flows that we saw yesterday, about 1,200 crores. The numbers were available. And that should be probably because of the plentiful liquidity promised by the Reserve Bank. That is expected to kickstart both loan growth and consumption. We also had the other big tailwind for India, which is crude prices falling to $55. I mean, every time you think that this is the big fall and the market surprises and say, no, a bigger fall is round the corner. And we saw a further leg up for oil refiners, for paints, airlines. Now, the biggest beneficiary of crude falling so much, as we all know, is the currency. But as the currency strengthened, it brings with it its casualties. So you had IT stocks, metals. Obviously, the imported metal becomes cheaper when the rupee is strong. So metal stocks, especially aluminum stocks, because aluminum as well fell globally, they were the ones that took it on the chin. But some more details stock-wise?
Yes, absolutely. So there were a couple of stocks which were in the red from the Nifty. So I'll start with that and save the good news for later. But Grasim, Bharti Airtel on account of fundraising, State Bank of India, ICICI Bank, Axis. So a couple of these corporate banks, in fact, lost out. Maruti was under pressure, and something like a Hindalco, because of aluminium prices, was lower in today's trading session, recovered from the day's low nonetheless. Gainers included Yes Bank, HPCL, BPCL on lower crude prices, Hero Motor Corp, Tata Motors, a couple of these rate sensitives, and Sun Pharma, which was higher. In the green from the broader markets included Jet ahead of that board meet ahead of the board meet today. Ujjivan, DHFL, Equitas, all of these stocks from the NBFC space were higher and seeing some amount of traction on the upside. But losers included a couple of the PSU banks, PCA or not. They did lose out despite that recapitalization coming through. So Allahabad Bank was down 4%, Canara was down around 2%, and Ashok Leyland lost out a little bit at 106 today. So that stock also was down 1.5%, Lata.
Okay. Well, that's the spread. Let's find out first what the indices will do, and then, of course, other questions that our viewers will throw up our way. Mitesh, let me come to you on the indices itself. It wasn't a very big dip at all. Yes, at one point we did fall to about 0.6% or a little over 0.5%, but recovered rather dramatically. What's the advice for the rest of the week?
Evening, Lata. So I think two good things. One, we are clearly outperforming the rest of the global pack. The second thing is that we were about 0.75% down, and the opening was as good as the low for the day, and the closing was as good as the high for the day. So I think we opened at lower end of the range, day's range, and closed higher. Clearly, there was some kind of buying going throughout the day, and the index kept on climbing up slowly. My sense is that this is a continuation pattern. Today's low therefore becomes an important marker in terms of 10,880, and as long as that is not being violated, stay positive. I still believe that 11,050-70 zone could be tested very soon.
Okay, all right, Mitesh. So that's the view on the markets. But let's get to the second headline for today. The government has moved to infuse 41,000 crore rupees into weak public sector banks to boost liquidity in the system. This will provide a shot in the arm for the weak ones who may now come out of PCA or Prompt Corrective Action Framework. Corporation Bank, Bank of Maharashtra and Bank of India all ended the day in the green. Sapna Das, who's been tracking all of these developments on this front, joins in. Sapna, over to you.
Well, the capital push by the government is a big relief for the public sector bank space, and if you look at the numbers, they are big. 42,000 crores still remains from the current budget allocation of 65,000 crores in terms of recap bonds waiting to be infused, and now you have an additional support coming in of 41,000 crores. So you're looking at a number of almost 83,000 crores worth of recap bonds to be infused in the public sector banks during the current financial year itself. So this is a big number that you're talking about. Within that, we are also given to understand that at this stage, if you go ahead and do this capital infusion, it may be possible that some of the banks which are under the PCA framework and where the indicators have improved considerably over a period of time, those banks may be able to do an early exit from the PCA framework. This is a broad sense that we are getting right now. Now, some of those banks where the indicators have been pretty good, the NNPA levels, especially for Allahabad Bank and Bank of India, they're below 8%. Other banks are also being spoken about. Say, for example, the Corporation Bank, OBC, there could be some movement forward on that front as well. If you look at the risk-weighted assets for the PCA banks overall, those risk-weighted assets have come down by around 15%. That's a big number again, and that will also free up additional capital. Very quickly, the other point is that with this kind of a capital push coming in from the government, you're looking at an envelope size of 1.06 lakh crores for FY19. If you take both the budget estimate as well as the additional estimate now to put together. So this will also help the banks raise money from the capital markets. That is also a pitch over here. 58,000 crores was the original target given at the time that the recap plan was announced, out of which I think the number that they have raised is just around 10 to 12,000 crores.
Okay, thank you for that, Sapna. The long and the short of it is that say probably Bank of India, Bank of Maharashtra and Corporation Bank are going to get the money. They also went on to say that Punjab National Bank will get the money because otherwise it will fall into PCA. And a couple of other banks like Bank of Baroda, which need to be strengthened because they are amalgamating other banks, could also be given money. That's the broad indication we have got. But some of that indication came after market hours, so we will see the reaction tomorrow. First, let's invite queries. Lipsa has tweeted to us. She says she has 1,000 shares of Bank of India, purchased at 155 a piece. My God. Well, she's asking if she should hold on. I don't know when she bought. Was it before? Maybe it's about 2 years ago. Well, anyway, what's the advice first, Mitesh? Should she stay put with Bank of India? She is about 50 rupees or 60 rupees below her purchase price.
I do believe that, I think the stock can be held on. One, I think we have made, it appears that the stock has made an important bottom around the 75 mark and given a swing reversal around 92. So I think 90 on the downside should be a good support to hold on to. I think eventually the stock will head towards 130 odd levels if you give it about another 5 to 6 months. So in that sense, I think at least the good part of loss will be mitigated, and around those levels you can either exit with a very minor loss or take a fresh call.
So it was 155 in January.
Okay, well, Mayuresh, what's your opinion on Bank of India, the query and also the PSU Bank recapitalization?
So evening, Ekta. No, largely again, I think what has transpired in terms of the additional cash coming through in terms of 41,000 odd crores that the government is meeting out. I think that's sentimentally positive, but again, I think this was something which was required. So I think the overall capital outlay which will come through is the need of the hour for a whole host of these PSU banks. So that's point one. The other element obviously is their core financial performance. So as Lata was rightfully mentioning, I think a few of the mid-cap PSU banks, Bank of India included, if you look at their net NPAs and asset quality in general, I think those pressures are coming off significantly on a quarter-on-quarter basis. What they've also done in terms of expectations of if the money probably comes through, whether they can expand this balance sheet by providing the advances in the right areas, which will probably give them the kind of spreads that are required, is an essential part. But the essential part also happens in terms of how much of an equitable contribution can actually come through for these individual banks. So yes, I think it's a step in the positive direction, but I think the financial performance will be drivers. So sentimentally, I think the stocks will move higher, but the financial performance will re-rate these stocks. For Bank of India in particular, I think where she's bought the stock and where it is at this point of time, obviously I think the sentiments, if equity does come through, will play out positively for the stock. But if the financial performance continues as it has been in the past 2 quarters, and a large consensus is that there is a reasonable amount of recoveries and upgrades that these banks can also play with, I think that can create a re-rating for the stock. So unless she has a long-term view, she can probably hold on. Otherwise, I think the private corporate banks is something that we like at this point of time, something like an ICICI Bank.
Okay, fair point. Bank of India apparently already showing some progress in controlling NPAs, likely to be rewarded with a goodish amount of capital. Well, the third headline for the day, crude oil prices continue to fall for the 4th straight day, this time hovering around the $55 per barrel mark. Oversupply concerns and the energy demand outlook being dim weighed on the prices. Crude sensitives like oil marketing companies, HP, BP, IOC, ended the day in super strong territory. So did airline stocks, paint stocks, all of which were up between 1% and 3%. Manisha Gupta, our commodities editor, is here with more on crude, why it has fallen and where it is headed. Manisha.
Well, further pressure continues in case of the crude oil prices, where we now are 35% down for the Brent prices and 38% down for the US crude oil prices from its October highs. And it has been very volatile, but the direction clearly seems on the lower side, where we are making lower lows in case of crude. The latest pressure point comes in from the fact that the increasing supplies from US, from Saudi Arabia, from Russia just about continue. And the markets also are looking at demand concerns from the global markets as we get into 2019. Even as there have been a couple of bullish points, like the US weekly inventory seeing a decline for a 3rd straight week and very sharp declines for the US product inventories. If you look at the demand for diesel and gasoline and heating oil, that has been gaining really in last month or so, but that hasn't been able to support the crude oil prices. There also was a statement from Saudi Arabia oil minister saying that by the end of first quarter of 2019, much of the excess supply from the global markets will be out. So these were a couple of bullish points that led to support yesterday in the market, but today yet again you have seen net short continue to be built up on. When we started 2018, it was a net long position in crude that we began with, but where we are ending 2018 now is with net shorts. Also, the open interest has been declining. Many of the speculative hedge positions are unwinding right now. So as we get into the new week as well, the expectation is that the volumes are going to get lighter. You will see open interest continue to decline, and that would mean exaggerated moves. nobody really wants to go short right now, even though people are talking about another couple of dollars of a decline from here on. But there aren't those trading calls coming in case of crude for that. At this point in time, it is going to be contained in a range where $2 down and $2 up is what the markets feel. But the volatility is something that nobody really is ruling out.
Point taken, Manisha. But Manisha is making a subtle case for some bullishness. As she says, there are seriously more short positions. Nobody wants to further go short. So maybe some covering by the year end.
Yes, absolutely. And volumes are definitely going to dip by next year. By next week. But nonetheless, let's get in a query now. Nishant Kumar from Delhi has written in to us with a query on Indigo or Interglobe Aviation. He's been holding 469 shares of the company at 995. And he's a long-term investor, wants to know if he should hold or sell that particular stock. Mitesh, what would you recommend on Interglobe, currently around 1150?
I think this one has clearly, been showing a good strength and continues to move up ever since bottoming out on the 700 mark. But I think overall around 1250 to about 1300, the stock will face multiple resistances. So I think around those levels, my advice would be to take profits.
Oh, I see. Similar question to you, Mayuresh. What should he do with Interglobe? He's in the money.
So Lata, I think the variables have obviously changed for aviation companies with crude coming down drastically and the rupee appreciating, and these two key variables determine the earnings sensitivity for aviation stocks as well. So a large element in terms of their cost, which is typically the ATF prices, have come off, which means that the cost per available seat kilometer is expected to come down. At the same time, I think for certain routes, you're expected to see some hikes happen, which means that the revenue per available seat kilometer can also stabilize, which means that the stability in terms of reported yields can actually come through. The third element obviously is the addition in terms of the A320 Neos that they might add on, which are very, very fuel efficient. So to that bit, again, I think it will be incrementally positive from an earnings perspective. And again, you're entering into a typical season, which is a very, very strong quarter for aviation companies. So looking at his price, looking at his outlook, and assuming that these two variables stay at around the same price, he can definitely hold on to the stock.
Okay, so that's slightly contradicting views. Mayuresh says hold on, but Mitesh says I think at higher levels he sees resistance a little over 1200 rupees. On that note, we go into our first break, but let's leave you with some excellent market opinion, very important market opinion we got from Mark Mobius of Mobius Capital Partners, who says that with China slowing, India has a good chance of standing out in 2019.
I believe that India could decouple and move forward in view of the incredible growth rate of the economy, one of the highest in the world. Of course, among the major countries, now India stands out. With China slowing down, India has a good chance to stand out. What is concerning to us is the the political talk about the farmers' loan forgiveness, which is a palliative. Of course, it's very good for the farmers for the short term, but for the long term, it's not a very good move, I believe, because it means that you're not looking at the basic problems, which is infrastructure and other aspects which will help the farmers in the long run. In the short term, of course, the loan forgiveness helps the economy, and then you get a boost to growth. With this loan forgiveness, of course, you're going to see consumption skyrocket, and you're going to see many, many opportunities in the consumer area. Definitely, there'd be a real problem if you see the reforms that Modi has introduced disposed of. That would be a real backward step. Now, I believe that the Congress Party would not do that. They probably continue, but populist measures are not a good medicine for the economy.
Mitesh Thakkar and Mayuresh Joshi are with us to decode the day's action and answer all of your questions. We are through with 3 headlines of the day. So let's get to the 4th one now. The rupee, in fact, broke below the 70 mark against the dollar today, all thanks to a sharp fall in crude oil prices and strong foreign flows into equities. IT stocks were in the red. TCS, Tech M, Wipro all lost close to 1% because of an appreciating rupee. Well, Lata, positive for the rupee?
Yeah, you pretty much summed it up. Ever since crude has been falling, we've seen a rising trend in the rupee. It is the biggest reason for the current account deficit, and that is bound to decrease because of the fall in crude prices. But more importantly, today, globally as well, you saw the dollar weakening because the Fed, the dot chart of the FOMC, promised that instead of 3 hikes next year, there will be 2 hikes. So that itself led to some dollar weakness, and that in turn translated to strength for all emerging market currencies, though India outperformed. I mean, most of the currencies were up about 1/3%. India was up over 0.5% for a better part of the day, the rupee. And the other big reason has been this flow of funds into Indian equities, foreign flows. Up until the last number we have, December has been a positive month in terms of FII flows, which also is chasing the same 2 things. You know, when crude is lower, India is an outsized beneficiary, and because of the Reserve Bank's kind of looser liquidity policy, there is an expectation of growth, and that is also bringing in a lot of foreign flows, all that helping the rupee. And today we saw dollar getting cheaper than 70 rupees for a better part of the day. You have questions?
Yes, in fact we do. We have Senthil Kumar from Chennai. He's written to us with a query on HCL Tech, wants to know a short-term outlook on this stock. Mitesh, what would your view be short-term? So technically, how does it look?
See, I think the stock actually declined after that acquisition news came into the markets and has kind of gone into what I would call as some kind of corrective movement. I think on the upside, 1030-40 becomes a big resistance, and on the downside, I think around 900 to about 890 would be a strong support zone. So the idea should be to enter towards the lower end of the range, try to exit once it crosses, gets close to about 1040-50 on the upside.
Okay. Well, I'll leave it at that because this gentleman Senthil wants only a short-term view. So let's get to the next headline, the last headline from Dalal Street today. NBFCs and small private banks were up in trade for the 3rd straight day, actually, after the Reserve Bank decided to step up bond buying earlier this week. DHFL, Repco, and such other stocks led the pack for the NBFCs, while IDFC Bank, DCB Bank, and South Indian Bank were the small private banks that ended in the green. However, bigger banks like SBI, Axis, and ICICI ended the day in the red, probably on account of profit taking.
Okay, Ajoy Kumar Mukherjee from Kolkata has written to us with a question on Bajaj Finserv. He's been holding 10 shares of the company at 5,000 rupees for the past 2 years. Long-term investor wants to know if he should hold or sell. 10 shares at 5,000 rupees. Mayuresh, what would you recommend? Bajaj Finserv has been relatively resilient as compared to housing finance companies and a lot of the other NBFCs in any case.
Oh, absolutely, Ekta. And again, I think the better capitalized NBFCs have stood the test of time over the past 2 months specifically. And what you probably witnessed for better corporates like a Bajaj Finserv, I think the business model might go through times of volatility, but I think the long-term projected earnings profile still remains very, very solid. So across its business sub-segments, you're expected to see reasonable amount of growth being carried on. And with that respect, again, I think the kind of balance sheet dynamics that this company possesses and the kind of penetration that can still be done in a lot of products that it operates out of can still drive superior earnings growth. So I think the premium valuation that this stock derives is based on the premise that these operative elements will work in its favor over the next few years. So yes, I think if the gentleman has a long-term view, carry on holding the stock.
It is a long-term view, Mitesh. Nevertheless, as long as you can see, what's the target for Bajaj Finserv?
No, that's difficult to give fresh target, but what I can tell is, I think, the last time the stock corrected, we saw a bottom closer to about 5,000 and then 5,400. So I think he's bought it where the long-term bottoms are, intermediate-term bottoms are being formed. In that sense, I think the stock should at least give him, before breaking that bottom, since the structure is still positive, I think it should at least give him 25% more from here. So 8,000 could be a working target, and then you can keep revising it because it's at fresh all-time highs. Keep revising your stop loss and keep trailing the stop losses in the longer-term charts.
Okay, now that's a resounding buy or hold from both our experts to the gentleman who is holding Bajaj Finserv. Mitesh and Mayuresh, thank you very much for joining us and answering questions of our viewers and all of you out there. Thank you for watching Markets Today.